Hi, welcome to the Investment Blueprint. I am your host, Raghu Kumar from Rain Platforms. The Investment Blueprint is a podcast where I interview traders, investors, quants, and finance professionals in the space of retail trading and investing with the goal of helping pass on their knowledge to you. Today, I interviewed Nitish Kumar, a full time proprietary trader based in Pune, India. Nitish mostly trades in the US equity markets on the NASDAQ and the NYSE, but he also does a fair amount of activity on CME commodity futures contracts, Forex, and global equity markets like the LSE, the DAX, and the SGX. He also actively trades the Indian equity markets. Nitish is also the floor manager of Mindstone Technologies, where he manages a team of 2025 traders. Today, we will talk about his journey as a trader, how he spends time trading so many markets around the world, and the learnings from each.
Yeah,
So, Nitish, welcome to the podcast.
thanks for having me. Love to be here, and yeah, that's a really nice introduction. Thank you.
Awesome.
Yeah.
So, let's start with your general, kind of background. How did you kind of get introduced to, trading and investing?
Okay, so it started very early. I would say I always had the curiosity, how this financial market works. Even when I was in high school, I was looking at ticks, different stocks, and then the general tendency was everyone was to to get into engineering. So I went into NIT, which is a pretty good college in India. So and then soon early I realized that engineering is something which is not for me. And at that time my curiosity over financial markets started to grow, and I really wanted to see how this structures, how the market works and all sort of things. And if I'm being honest, I really thought at initially that market is something, market is like a free money or easy money. You can just go in, do a couple of trades, and I thought to myself, all these experts on TV, they must know a great deal about all these things, so I just need to follow those people, right? And so I did exactly that. And it turns out it was easy money, but for someone else, because I lost majority of my saving at that time, like pretty quickly. I knew nothing about the market. I was just trading on advice, tips, and everything that traders shouldn't do at any cost, right?
Right.
Then my journey started, as I would say, as a trader. Then I started to learn, started to see things, that how this structure works, how the market works, how do you operate, how do you trade. And I realized that there's lot goes into it. There's just so much hard work, and then I started trading on a demo account over the years. And I slowly getting better at, slowly learning from each every day. It was really up and down for me during my initial college years. And also the college was going on, so there was pressure from study, but still this is something I was truly passionate about. So I slowly, gradually over the years, it was purely self learning, because at that time there was YouTube was not a big thing, and the educational content, the mentors were not there, and even it is beyond my reach. So I have to do a lot of self learning, lot of trial and error I have to do. So over the years gradually become better. And around fourth year, when I was in final year, so the, there I decided to decided to go all the way into the trading. I decided not to sit for the placement, which was a spectacular decision, I would say, because in my college, because you get into these kind of college to assure a good quality job,
Right.
which my college was offering, because we have to pass an entrance exam, a big entrance exam, to get into these NIT and IITs.
Right.
So even in my family was against it, because why do you want to do something you can have a secure good job, that every family wants you to have.
Right.
But my heart was in trading. So I didn't sit for the placement, and I decided to do trading full time. And I was
Wow.
already profitable before that, but this time I was taking it full time and seriously, because the college was over, so I can fully focus on trading. And there I started trading. First I started trading Forex, because of the leverage, I would say, because the leverage attracts
Yep.
me.
Yep.
I would say I was not that mature at that time, because I was not, I would say, risk management was something which I was still getting my hands on that. But fortunately I was doing good. And during the first year or something, I made around 86% on my return,
Wow.
which was for me, which was
So that was a
spectacular. Because
Forex.
yeah, yeah, yeah,
Okay.
yeah. and bit of equity on the side as well. But I was mostly trading forex at that time.
Yeah.
uh, the Indian pair, right?
Got it.
So and that feeling was great because at times I was earning more than my friends who was doing full time job. They were working for 10, 11 hours, and I was usually done for the day in trading, like for in a 2 or 3 hours man, right? So uh, the initial months were pretty static for me because as I said, timing was not an issue. I was at my home, trading, earning, and spending as much as I can because I was just a young boy back then,
Yeah.
and I had no sense of whatsoever. I was getting money. But that was the I just want to add on that was the cumulative result of previous 2 to 3 years of my hard work, where I was losing money, where I was making my way, getting my strategy to the perfection, right? So that was the cumulative result of that. Okay. After doing it for around a year or so, it gets very monotonous for me because when I look at myself, I was not growing. I was not it
Hmm.
was just I'm doing same thing over and over again, despite the fact that I was earning money. But I kind of feel a bit of a trap because you don't see the growth in yourself. And so I decided to
Hmm.
go for my MBA.
Okay.
So I wanted to see the all side of this industry, not just the trading side, the investment side of the industry as well. So I did my MBA in finance, and where I also interned in an investment bank. So there I see the buy side of the industry, the fundamentals of how these things work, which was completely different from trading. I started to learn about how you make valuation models, and predominantly I was a day trader. And to get a shift and to get this side of the industry, where you don't rely that much on charts, you rely on fundamentals of the companies, and you manage a portfolio, you manage the risk of the
Yeah.
whole portfolio rather than just one individual trades or a company.
Sure.
So I was also meeting clients, so that was a very uh, good experience for me. But that just made me realize that this is something I don't want to do. Trading
Okay.
was, yeah, that made, although it was a good experience, I'm fortunate for that experience. But
Did you finish your MBA?
yes, I did.
Okay.
uh, so education is a big thing in my family, so there was no way
Sure.
my family gonna let me to flunk out of MBA. So I
Yeah.
wanted to do my MBA, so I did complete it. And then I joined my firm, and I started there as a junior trader. And since I already had my strategy, I was trading throughout this time. I was trading to whenever I get the time. So I had my strategy, but this time the market was completely different. It was we are majorly we are trading US equities market. And
Hmm.
then I realized that US equity market in so much way better than Indian equities market, because of the liquidity that US equity market have.
Right.
There are so many stocks which are so liquid that
Right.
you can because a lot of time, especially if you're a day trader, when you do short term trades, a lot of your profit goes into spread, right?
Right.
So when I see the liquidity is there, and I can even implement some of the more things which I was a little bit hesitant when I tried that on Indian equities market, because of there was so much spread. And also there's a also it Indian markets, I would say, sorry, uh, are bit notorious. I don't think, yeah, a bit notorious because they are also subjected to high manipulation as well,
Hmm.
which is also there in US market, but slightly I observe it
It's
to be
different. Yeah.
yeah, it's different. Yeah.
Yeah.
So my performance grew. In my company you have a policy that you have to first go through demo account, and I quickly showed my result in the demo account, and then I moved to the live account. And
Got
then
it.
I started gradually growing my capital. And then my firm realized that I can teach as well. So they gave me a task, they gave me an additional responsibility. Why don't you teach new traders? They are making the same mistake, and you can help them. And I was like, yeah, why not? I started taking classes there as well, and I enjoyed interacting with people. So this was something I didn't consider as a burden or anything. I enjoyed
Sure.
sharing knowledge, sharing, passing on to the things. So I started training them, educating them, and seeing them doing the same mistake which I used to do years ago,
Sure.
and rectifying those mistakes was a bit of a gratifying moment for me.
Yeah.
So I started teaching them, training them, and then they start and they find it, and they decided to give me the position of the floor manager. Why don't you manage
Okay.
this team? Why don't you manage this team? You're already
Yeah.
doing a good job. So I was like, yeah, why not? This is already I was doing and I enjoyed it. So then I quickly move up to the ranks, and then I started managing team. And so in a trading world, as you know, that it's a very challenging thing. It's a
Hmm.
trading to to reach consistency. So even though despite giving all the proper training and education, it's ultimately depend on the person, that how you
Sure.
implement it, how you do it with
Yeah.
your discipline, right?
Sure. Sure.
and
Sure.
uh, and at
Yeah.
many times, despite all these things, you have to let go of these people who are just not, because it's such a demanding field. We cannot give
Sure.
you
It's
so
cutthroat.
much.
It's like it's a
It's a
negative sum
cutthroat, yeah.
game, right? This is
Yeah,
how
it's
I
a,
kind of
yeah.
describe trading to people.
Because in trading, if
Yeah.
you're not making money, you're losing money. There's
Right.
no middle ground,
The average
and
person is losing money, right? It's
yeah,
not
yeah,
even a zero sum game. It's a negative sum game.
yeah,
So,
yeah. It's almost like
um,
97%, yeah.
right.
So
Exactly.
yeah, so
Cool. So a lot to unpack there, right? I wanted to kind of
yeah,
just kind of jump in here and ask a
yeah,
couple questions.
sure, sure.
So you've been trading for like basically like almost like 10 years, I guess,
Yeah, yeah,
right?
yeah,
You
almost,
probably
yeah.
started around 2012, I think,
Yes,
right?
yes, 12 is 12, yeah.
So initially, just generally, when you kind of made that 86%, in
Yeah,
that kind of crazy first year, what were the types of strategies that you were using in
yeah.
the forex markets?
So as I mentioned, predominantly I was a day trader. So
Hmm.
because of my limitation of my capital and all sort of thing, that only allows me to have a decent enough profit if I'm doing a day trading. So
Right.
that was more of a condition to me. And but when I started doing day trading, I realized this is something more for me, because I'm good at my feet, I'm good at calculation, and I like to see things on a daily
Okay.
basis. Yeah. So the strategy which I was implementing, which I still do up to the some extent, that I was doing back then, was purely based on support and resistance. I
Okay.
believe that irrespective of the markets respect these levels.
Sure.
And if you are just careful enough, you're just careful enough, and you look for the patterns, look for the price action there, you can definitely implement quick scalp trades here and there, and you can make a decent profit. So my strategy, as I mentioned, it involves support and resistance. So what I do mostly, uh, that I draw these levels, and I look how the markets are reacting around these levels. So they are very different behavior when the price action around a level, and it tends to break. When you see a break trade, so it behaves slightly different. You can see it on the chart, right?
Mm.
And when and it's slightly opposite when you see the bounce. When the trade is bouncing. So I started noticing all these things, and I implementing my trades around it. But I
Okay.
just want to add that this is just very small part of the whole trading plan. you know People are generally attractive. They only want a trading strategy. They
Right. Right.
don't
Right.
realize that,
Right.
yeah, they don't realize that
Right.
it's a whole trading plan that goes around it, and trading
Of course.
strategy is just a very small part of it.
Sure.
So even though I was observing all these things, I was taking trades. I still need a strong risk management system,
Sure.
because yeah, so that I make consistent profit over the time. So
Hmm.
that takes me so I have a different levels of risk management. I will exit here, I will add more here, I will have my stop loss here, then I will trail my stop loss here. So it's a very detailed and very structured plan.
Sure.
It's not just support and resistance, looking at thing, buy sell here, just put your stop loss. No, it's lot goes into the market. Sometimes you
Sure.
have to exit prematurely, sometimes you are expecting a 1:2 trade, then you end up getting 1:4 trade. So you have to be open to all sort of things.
Of course.
Trading
Yeah.
is never static. Trading is never static. That
Yeah.
just you
It's
just
the most dynamic
yeah,
thing in the world,
yeah,
I would
yeah,
say,
yeah.
right?
And that, yeah,
Um, yeah. So one question I have for you here, right?
yeah,
So one thing about your story, which is pretty intriguing actually, right, is not only do you mostly trade in a discretionary manner, but
yeah,
you're also trading multiple markets around the world, right? So you're
yes,
trading Indian markets, you're trading the American markets.
yeah.
So the first question I have for you is, what does your typical day look like? And also, how do you kind of think about trading markets concurrently, right, without letting it kind of overwhelm you?
Okay, okay. So I'm if you're a trader, I am that. If you're a trader, you're always passionate about the market. So for me,
Hmm.
Sundays are the most boring days, because I cannot wait for the Mondays. I want the markets to open, right? So
Right.
Indian markets open at around 9:15 Indian Standard Time. So I usually wake up around 8:38 or something like that, and then then I filter some stock. So Indian markets, I do it on my personal account. Okay, so that is something I do. And I am not that active in Indian markets as compared to US equity market. I do trade it
Okay.
on a regular basis Indian market, but it's not mandatory for me to take trades every single day in Indian equities market,
Sure.
because sometimes the opportunity is just not there, the liquidity is just not there, the stock which you're looking, it does not has a very high spread, and all sort of things is happening in the market. So I usually scroll the market, look at the filtered stock, and if anything interesting happening, I do take the trade. And usually my risk management system and my trading plan is very similar that what I do in a US equity market. But
Okay.
you have to be extra cautious when you trade Indian equities market, because it's just because of the lack of liquidity. It For a day trader, it's particularly very difficult. You can definitely have a long term trade. I also have my own portfolio, which is personal portfolio, which where I took swing trades or a long term investment trade. So I occasionally browse, how the stocks are performing here and there, if there's some fundamental factors that I need to know, for if I have to adjust my portfolio a bit. So I
Hmm.
usually do it for around just first 1 or 2 hours of the market.
Okay.
And then there's a training which I also provide training. So
Hmm.
I have an online class which I do. I teach people, train new traders and students too. So I do it for around 2-3 hours, and then there's a couple of hour gap. And then I usually go to gym or exercise. And then I started preparing for US equity market, which opens at around 7 p.m. Indian Standard Time, but it is just to do daylight saving, it is now at 8
Yep.
p.m.
Yeah. Yeah.
So there's a lot goes. I have to first of all, you have to do, because since there's a pre-market and
So you're not
post-market.
sleeping between the Indian Open and the American Open.
No, I do
Oh, you
sleep.
do. Okay. You
I do
sleep a
I
little
do
bit too. Okay.
Yeah, so there's a so yeah. So because I sleeping, I think that's very necessary, because
Yeah.
I want to be at my best state
Yeah.
when I trade US equity market, because this
Right.
is where my majority of my volume, majority of my bulk of my trade goes.
Sure.
And it's such a dynamic market. US equity market is slightly faster than Indian markets. So I
Hmm.
need to be at my best possible state. So I go to the gym right before it, so that all my bloods are flowing good. I do cardio, I go to gym regularly. These things, I would say, are not directly related to trading physical fitness, but I do believe it's such a competitive field. I
Yeah.
do think if you are at best, if you are at your best shape, that will somehow going to affect on my trading.
100%. Yeah,
Yeah.
I agree.
So
Yeah.
1 hour before the opening, I kind of filter the stock, make levels, and try to write down plans, that how will I implement if the market goes different, if else scenario. I write down, I try to visualize, that I will do this and that, the share size and all sort of things,
Sure.
fundamental. So the lot goes behind, uh, sorry,
Behind the scenes. Yeah.
behind the scene as well.
Yeah.
Preparation is a big part of it.
Sure.
And then when the market opens, I do the same thing. I already had my label drawns. I already had a very well defined, well mannered trading plan is placed. So I just implement it.
Sure.
And but you need to be very quick,
Yeah.
because there's so many stocks and so many things happening. You need to
Right.
and one of the thing that the issues which you have initially is that you miss trade sometime, because you're looking
Hmm.
at that stock, you're managing that stock, and then you can miss a good opportunity there. So you have to be very quick. You have to
Sure.
be very quick at maths. You have to be quick on your feet to calculate, to
Yeah.
think. And uh, and that's why I find that it's very difficult. Day
Yeah.
trading as a type of trading, I would say it's one of the difficult form of trading.
Most difficult things.
And
Yeah.
yeah,
So
yeah,
one question I have here for you here is when it comes to trading the U.S. markets, what
yeah.
platform are you using, and just generally, what sorts of tools do you use for both the Indian markets and the American markets when you're
Okay,
actively trading?
okay. So we have international platforms such as like Lightspeed, and we have something called the Aurora. We have our brokers, we have our partnership that allows us to access US equities market. So that is in Canada, so they have their own platform. So we use that platform, which is called the P Pro. And also Lightspeed is there, so we access that as well. So yeah.
Got it. And what about for India? Do you just trade on your own retail account?
Yeah, India. So we have local brokers here. So we have I
Okay,
have
sure.
Zerodha, I have Angel
Yeah.
Broking. So these are local brokers which I have account on. So yeah,
Got it. Got it. Got it.
yeah,
Another question I had, when it comes to your trading is what are the major differences that you notice? So you talk about spreads, right? And how
yeah.
the spreads can be kind of wide on the Indian side. Generally speaking, what are you looking for when you're looking for liquidity factors, right? Are you looking for a certain amount of volume traded? Are you looking at the actual spread? Like, how do you kind of think about that?
So majorly what I look is at the charts. Okay, so what happens is that, for example, if you take a stock like Apple, which is the most liquid stock in US, I
Yeah.
do trade it very frequently. It's around it's $150 stock on an average right now, $150 stock, and it has just a spread of 1 cent. And when you compare it with Indian stocks, if you take Reliance, for example, which is the most liquid stock in India, which is
Right.
cost around 2500 Indian rupees. So it
Yeah.
can easily have a spread of 2 3 rupees. And when
Because
you
of rupees.
and
Yeah.
yeah, and at times it can even extend to 5 10 rupees as well. So when you are scalping, when you're
Yeah.
scalping, you need to have the best possible fill that you can have.
Right.
So for
Right.
example, you're looking at the chart. For example, if you're looking at the chart, the level is at 100 and you are looking to
Right.
buy at 100, you know, and you might have a target at 105. But if you're getting a fill at 101 instead of 100, that completely changed the risk management. That
Of
complete
course. Yeah.
that,
Yeah.
and that is the big issue which I found in Indian markets if you're doing day trading, because
Especially as
these
a scalper too. That's a very
yeah,
different
scalp,
ballgame
yeah.
altogether. Yeah.
Yeah, and I do momentum trades as well, but they are
Yeah.
not a big part of my trading style. But when you day trade, so there is something called the ATR, average true range of all the
Hmm.
stocks irrespective of the market.
Okay.
So when you day trade, you need to realize that these stocks on a daily basis will not move that much.
Right.
So they have a
Right.
specified range that they can only move around
Right.
1 and 1.5%. And
Right.
depending on if the stock is already 1%,
Yeah.
even if you're seeing a very good opportunity, it's very unlikely that it will go 1 to 2% if
Sure.
it has a range of only 1.5%.
Right.
So these are the things that you need to you have to be careful when you're doing day trading,
Right.
which you can let
100%.
go of in swing trading. Yeah,
Yeah. 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 Makes sense, especially in your
yeah,
case because you're a scalper as well, right?
yeah,
And when it comes to the major differences between the US markets and Indian markets, what are some just general major differences apart from the low
yeah.
spreads and high spreads? What other kind of things have you noticed?
Yeah, so one of the major difference I would say is the existence of pre and post market, the big pre and post market in the US market and the Indian market.
Right.
You can see the market literally opens at 4:30 a.m. Okay,
Right.
and you
Yeah.
can actually see the chart and you can actually place the trade.
You can
And
place trades.
sometimes
Yeah.
yeah,
Yeah.
yeah, which is
Yeah.
completely non-existent in Indian market. We do have a
Right.
pre-market. For namesake, we have a pre-market. It's just a
Yeah.
15 minute. Plus you
Right.
cannot see the chart, you cannot see the quotes. It's like
Right.
playing blind. You can either
Right.
it can
It's
fill
actually
and
it's basically that. It's like it calculates the indicator price,
yes,
but
yeah,
you don't know how that price movement is happening
yeah,
between 9 to 9:08, right? So
yeah.
yeah,
and and
it's like shooting in the dark, right?
yeah, and
Yeah.
whenever I teach my students this as well, that if you want to increase liquidity in any market, you
Yeah.
need to give access. You need to be more open. I give you one example. Earlier, uh, the level 2 codes in US, you have all the codes. Yeah, you have access to all the codes, right? And even
Yeah.
they even tell you the ECNs from where these orders are coming. In India,
Right.
it earlier it used to be just top 5 buyers and top 5 sellers, just the top
Right.
5 bid and ask, right?
Right.
Just now they moved from 5 to 20, but still we
Yeah.
don't have the access to ECNs. We don't have the liquidity information on liquidity provider. So that's why it is
Right.
more subjected to manipulation in Indian markets. And that's
Hmm.
why you don't see a lot of foreign investors trading. They do invest, but as far as the trading is concerned, I think the SEBI, the regulatory body, and the NSE and the BSE should make it more lucrative for other traders as well. India, as if we just talk about general population in India, only around 5% are active in financial markets in India,
Right.
which is very low. If you
Yeah.
compare it with US, it's like 50 60%. So, and that's why they have so much liquidity. So you need to give more access, you need to be more transparent to the public, right? You need to have a bigger pre-market, bigger post-market. Indian
100%.
market, yeah. So this is, I think, if NSE implement it as early, it would be very beneficial.
Yeah, I mean, I think there, things are headed in the right direction, right?
Yeah.
And things do open up over time. But one major thing is just the lack of compatibility between exchanges, right?
Yes.
Interoperability needs to come in, basic things, which will come in over time, But staying on the topic of the U.S. markets, what are
Yeah.
some general trends you just noticed within the U.S. context? Which is a little bit, a different question. But over the
So,
past, say
yeah, yeah.
4 or 5 years, what are some general trends you've noticed over there?
So because of such big pre-market and post-market, what one of the thing that is also contrastingly different between the Indian and US market is the big gap ups. You can
Mm,
literally see stock gapping up 100%, even 200%, right? And
right.
and 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 there are times that crazy moves, like the stock moving from $5 to $60, which you very rarely you see on Indian markets. And halts, it's
So,
something.
so what causes that? Like when you're saying something moves from $5 to $60, I know in India you have circuits, but apart
Yeah,
from the
yeah.
fact that circuits, I don't think there are circuits on the U.S.
they
exchanges,
they
right?
have halts, they have halts.
That's halt. That's different.
Yeah,
That's an
yeah,
exchange-wide halt, right?
yeah, yeah.
When it comes to individual securities, what causes that kind of crazy price movement within a day?
So uh so us us has, I would believe that there are a lot of investment bankers, right? They
Right.
and they have huge cash at their deposit. And
Yeah.
because of the liquidity, they can easily fill large amount of orders. They can easily fill,
Hmm.
and that pushes the price from $5 to $60. If you look at the example, I was literally trading GME stock, and I traded GME at $4, $5. I took a lot of trades in GME, and looking GME from going to $5 to 40 to 50 to even to up to
Yeah.
150, and at time it even touched 400. So
Right.
these are the things which, if you're not careful, if you're on the wrong side of these trades, you
Yeah.
can literally lose a lot of money.
Yeah. Yeah.
By the time they halt the stock, they do halt it. GME also, when it was making this crazy move, it
Right. Right.
halt
Right.
couple of
Right.
times.
Also
But
at the
if you're,
broker level as well. Yeah.
yeah, yeah, yeah. But because of the liquidity, because the investment bankers have the confidence that they can
Right.
fill these large orders without disrupting the overall prices. This pushes the market,
Yeah,
pushes the
another thing
price
that
here.
also goes in the favor of the U.S. is you can short night. You can short stocks overnight, right? So you can kind
Yes.
of there's no
Yeah.
kind of restrictions in terms of what you can
Yeah, you
do,
can have owner.
which
Yeah.
basically allows for better price discovery, right, and probably more volatility in price
Yes. Yes.
movements.
Yeah.
I wanted to kind of switch gears a little bit now. So
Yeah.
you spend a lot of time training students, right?
Yes.
So in that whole process, you probably see firsthand, what some of the mistakes that beginners
Yeah.
make, when they start trading.
Yes.
What are some of those mistakes? If you had to highlight just a few kind of raw mistakes that a lot of beginners make, because some of the listeners, to this podcast are probably
Yeah.
also, beginners.
Yeah.
So, what are some kind of learnings you can kind of impart to them?
Yeah. So if any beginner is watching, I would just want to say that it is not about complicated strategy. It is not about these profitable traders are doing something secret. It's, if there is a key, it all lies within you. It's the discipline. You just
Hmm.
need to follow it up to the absolute core. You need to follow it religiously. And see, I usually give this analogy to my student. If I ask you, what is the secret of losing weight, right? And everyone knows that if in order to lose weight, you need to eat healthy, you need to properly exercise. These are the simple things that you can do and lose weight. But how many people are actually able to do it, right? So
Sure.
it all discipline. And so trading, it's the same thing. You just
Yeah.
need to follow simple things, simple rules and regulation that you yourself makes. But the difficult part is the ability to stick to
Stick
it.
to it.
Yeah.
Right.
So if you're a newcomer, I would say, don't look for any complicated strategy. Don't look for anything. We are not doing anything crazy. This is not secret strategy that I trade. It's all, I just mentioned you that I trade on support and resistance, which is the most basic type of strategy that you can find. But still, Same strategy, same thing. 95% of the people will lose money, and only 5% of the people will end up making money on that trade. It is because
Sure.
of the rules, it is because of the risk management that you need to set up. You need to follow it religiously, man. This is my stop loss. If it hits, it hits. There's no if
Yeah.
else. There is no that I should wait. If this is my target, if I decided this is going to be my target, it has to be there. It has
Sure.
to be there. So it's,
Yeah.
I mean, I cannot emphasize this enough. You can save so much time by looking.
100%.
Yeah,
And I feel like, a lot of algo traders, they have that figured out, obviously, because they're
yeah,
using a rules based system, but then they're missing out on all the upside that you can get as a discretionary trader, right?
yeah,
I feel the ultimate kind of mix happens in that kind of rare situation where you have a discretionary trader who's also extremely consistent and disciplined, right? Because then they're kind of getting the best of both worlds, right? Take a Warren Buffett, for example.
yeah,
Warren Buffett goes off of his gut instinct. He's also doing his research and he's extremely data driven, but he's also not just blindly following an algorithm, right? And he's
yes,
probably the best investor of all time. So
yes,
that's the example that I always give, because I talk to a lot of algo traders, right? And a lot of
yeah,
quants. And what I tell everyone is it's not like you have to be a quant, you have to be an algo trader. You can be any type of trader as long as you have rules, general rules,
yeah,
and you're very disciplined and consistent, right?
yeah. So there's a big debate, I would say, right now, which I at least feel that people have the since the advancement of technology, people think that these algos are better.
Hmm.
I always point them, I will say to that there are a lot of algos who loses money on a regular basis. A lot of algo firms go
Yeah.
bankrupt
Yep.
because it's ultimately depend on the person who's designing that algo. So
100.
if the person is a good trader, if a person is a good trader, he will make a good algorithm trade. Instead of just doing it manually, he just automating the thing. That's the only difference between algo.
Yeah.
Algo is not some super smart computer that
No,
is
it's not. Yeah.
yeah, trading on your behalf, and it is guaranteed to make you money. It's simple trader. So first, I even to my students I say this too: first focus on being a good trader, and once you are
Yeah.
a good trader, you can trade on equities, you can trade on commodities, you can even make your own algo and completely automate the process. But you need to become a good trader. That is the
100%.
key thing. Yeah,
And there's pros and cons to both. As an
yeah, yeah,
algo
obviously, yeah,
trader, again, you're able to automate everything. Some traders that I talk to, even on this podcast, a couple of them have full time jobs, right? They
yeah,
hold high paying jobs, and so they basically have to resort to algos, otherwise they're not
yeah,
going to
yeah,
be able to do both. But when you're running an algo, you're also missing out on just having a direct feel of the markets, which I
yes,
think discretionary traders have. So, yes, that's an amazing point. The last question I have for you today is basically about your future, right? So, this is a
yeah,
question I have for all my guests.
yeah, yeah.
Where do you kind of see yourself, in the next 5, 10 years as a trader
So what is
and
the
professionally?
before answering the question, what is the usual answer you get?
Usually, answer I get is something to do along the lines of maintaining a certain ROI, or getting more clients, or maybe managing more funds, something like that.
Yeah, yeah. So mine is bit of that, but I it's much more simplified version. I'm not going to talk about ROI and all sort of things. What I see myself in 5 to 10 years is I want to be recognized as a person who's consistently making alpha. Okay, who have strong returns, that I mean, I would consider it as a person that in 5 to 10 years, that that person is a great trader. That
Hmm.
person actually, where in the most competitive field, in the most difficult thing called the market, where many firms, where full-time people, their job is to make sure that they get the alpha.
Yeah,
That just individual, it just getting these crazy returns. That's crazy returns. And this is what I want to do. I want to be recognized as a trader. I also do investment, that is there as well. But I want to be recognized as a person, who actually beats the market, who's considered as a good trader. When you have a conversation that, if you talk about good traders, I'm not talking about being a world famous or all that, but generally, that yeah, that is a guy who's a great trader. So this is, I want to be called myself. I see myself in
awesome.
the 5 to 10 years. Yeah,
I
yeah,
like that answer, because what you're saying is you want to be able to generate good alpha, but you
yes,
just want to be known as a good trader, right?
yeah,
And,
yeah,
and I think, and a big part of that comes from, being disciplined, which you seem to have, and
Yeah.
being consistent.
Which let me tell you, it comes
Yeah,
after a lot of hardship. There are a lot of time. I often long walks. I mean, to the people who I mean, who are struggling, that let me tell you that struggling is guaranteed. You
sure,
will, there are times there you will think about your decision. You will have a long walk. You almost cried. I'm not hesitate to say that there are times where I almost wet my eyes because I was not able to figure out what is going on. So all these things will happen if you're a new trader wanted to get into this field. The struggle is guaranteed. But if you
100%.
just hold your nerves, if you just be disciplined enough, you will make it. You will make it. Yeah.
Sure. Well, thanks, Nitish. I think it was a really nice interview. I personally learned a lot.
Yeah.
Again, I tend to, be biased a little bit towards automated
Yeah.
algorithmic trading, but it's in these conversations that I really kind of appreciate, the
Yeah.
art of a discretionary trader. So thank you.
Yeah, it's wonderful. Yeah, loved it. Yeah, thank you.
Cool.